Hello and welcome to another update video about Ethereum. So it is following through to the downside as already discussed and suggested in the previous video, that we can view first of all the B wave top as being made here around 2022, that as long as that level is holding, we can count it like this with the roadmap projecting a C wave down. And we're going to take a look at targets just now. And then we take a look at the subdivisions. So the target for the C wave is the 1-to-1 ratio. That's sort of the very common one. I mean, the first target is the 61.8 extension. That's at 1818. I have to say this would be a very short C wave. I cannot rule it out, but it would probably not be able to make 5 waves. Okay. So this currently looks just like a 3-wave move down. It has not even reached the 61.8 extension, but what could certainly happen is that it gets a bounce from there somehow, yeah. But it would probably not complete the C wave there. But bear in mind that these are levels to watch. They are not necessarily targets that need to be reached by the dollar amount, yeah. But certainly the 61.8 extension is a level where we would expect a first reaction. That's at 1818 and is pretty much in line with the previous swing lows here that we made in this Elliott Wave triangle here on the 1st of May at around about 1800, 1810. And then we had this A wave low here at around 1790. The more common target would be the 1-to-1 ratio at 1691. That's the 100% extension, and we might even go to the 1.618 extension at 1485. Ideally, the C wave doesn't go below it. As you can see, the 1.618 extension is actually below our 78.6 retracement. Yeah, so that 1485 level is below our relevant support area. Not too much of a problem if we just get a wick below and then recover. But these are certainly levels to watch on the way down. Looking at the proportions, yeah, I mean, ideally the 1-to-1 ratio is, I don't think it will be enough, to be honest. If we look at this, if we look at the length of the wave 1 already, how long the third wave would need to be, I think it may not stop here at the 1-to-1 ratio, but obviously just below that, we've got the golden ratio, the 61.8 retracement, at 1663, and there's a bit of fib confluence here, so I'd be watching that area. Yeah, I think looking at the subdivisions, the 50% retracement will not be enough, but the 61.8 retracement may be. But we're gonna observe that, and these are very much moving targets. Okay, they are very much moving targets. It depends on these subdivisions as well, because just by looking at this move down, yeah, we highlighted yesterday that we could have a wave 2 top in here. And then we sold off and broke even the wave 1 low, really suggesting, yes, we are now in the third wave down. Target for the third wave would be, just making sure that I draw the fibs here accurately to the lows and the highs. Yeah, should be okay. Because the third wave target is already, the 1.618 extension, 1686. So again, it's sort of this area here around the golden ratio that is relevant, okay? So, but it depends a bit on the subdivisions. So I will observe that for you. But yeah, it is currently suggestive of further downside in the C wave. Don't expect it to be a smooth move. Yeah, it will probably lead to a lot of up and down. It will be a rocky road on the way down. But for now, I assume that the B wave was in. Yeah, we talked about that yesterday already. I assume that the wave 2 top is in here of the C wave, and the wave count is valid as long as we are holding that or holding below the wave 2 high. So we talk here about 1939. As long as we stay below 1939, this wave count is now valid. Yeah, it's done everything it needs to do, and I think looking at the subdivisions of this circle wave 3 here, it could very well be that the first wave of the third wave is nearly finished. And then we could get a wave 2 setback. So as soon as I see that, I will make you aware. But if you look at this, it looks pretty much like a clean 5-wave move down already. 1, 2, 3, 4, 5. Could be really in or nearly in. And if that's the case, I mean, I will not add it here to the chart, but I will highlight it to you. Standard retracement for the wave 2, but that really assumes that the low is in now. I don't have the evidence for it at the moment, but standard retracement would be between 1895 and 1921. You would expect the price not to go above 1921 in this wave 2. Okay, so that's sort of the idea. There is not much more to add really. We talked about targets to the downside. We talked about invalidation points. Currently no reason to change the view. The only, what would be the alternative count? Yeah, what would be if my assumption is wrong here that we're already breaking to the downside? I'm happy to change my view because at the moment, even though the market gives us all the confirmations we need that we're already in the C wave to the downside, we know how difficult B waves can be, and it certainly is worth keeping an open mind. So because we haven't taken out the A wave low here around 1790, it can still be that this here is going to be an extended B wave. So if it now does a U-turn somewhere and rallies higher, then we have probably a larger B wave, not a bullish breakout, but a larger B wave, which will do something very complex, and it will catch a lot of people out. So it will do something like that here, yeah, whatever. Just another leg to the upside, and just a much more complex B wave, yeah, which is possible because the B wave resistance wasn't even maxed out here at $2,067. So yeah, but for now, this is something that would be activated should we break above the wave 2 high that I indicated 1939. Yep. And until then, we can focus here on lower. Okay, that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.